trampoline thing. You gotta prime yourself.
Hey everyone, welcome to our multifamily Q&A. I know we've done these in the past, but we have a new show format today with some special guests and a new show coming out. So I got my co-host Terrance Doyle. Terrance, how are you, man?
Fantastic. Yeah, super excited to be here.
So you got two guests to come all the way from Austin, Texas, up here to Denver to come spend about 24 hours with us. Who are they?
Yeah, I'm super excited to have these guys. I got to know them a lot more over the last couple months. We got Van and Kyle, and I met them through social media. And basically, they were both posting about deals they had just closed. And I was really impressed with their stories. And I was like, I got to get to know these guys. And so here we are 4 or 5 months later.
All right. Yeah. Well, guys, thanks for coming out, man.
Yeah, thanks for having us.
Yeah. So we're going to, I know we got YouTube people already filing in here. So start dropping your questions and comments. We're going to start answering those in a minute, but we got 2 questions that came from social media before. And I think, Terrance, this came to you on Instagram. So Paula Matt said, question for Kyle and Van. What, aside from their age, separates them from others when raising money, negotiating purchases and sales? First off, how old are you guys?
I'm 21.
I'm 22.
All right. So aside from your age, what separates you guys?
Yeah, I can go first on that.
Go for it, Kyle.
For me, I think the thing that separates us is really more about just work ethic, because I think, and this kind of ties into age, we don't really have the dependence that a lot of 30 and 40-year-olds will have. We don't have wife and kids. We don't have those things that are pulling our time. So we really can be, fully committed to the projects that we're working on and the relationships we're having. But ultimately, it comes down to like being interested about the people that you're meeting. And I think if you can put the conversation on them and ask them questions about, their background, rather than trying to have them kind of learn about how cool your story is, kind of figuring out what their story is. And naturally, people tend to like people that like them. And that's kind of the main tip, regardless of your age, is just be interested in the other party that you're talking to.
So talk about that more, because that's a really good topic there.
Yeah. So, I mean, I don't know if anyone's read the book, How to Win Friends and Influence People. It's like one of the most famous, popular books ever. I'm sure everyone's read it. But there's a great segment in that book that I like a lot about trying to be like a dog, and why do we like dogs so much? We like dogs so much because when you enter a room and there's a dog in there, they're so excited to see you. It's not about the dog. It's excited to see you. It's licking your shins. It's just absolutely excited because you are you, not because you're someone that they think they are, or it's not even about the dog. It's just about, you. And I think that if you can be more like that dog, in a sense, being interested in the other party, really hoping to get to know them, then things tend to gel pretty well in conversations in general, regardless of negotiation or sales or whatever.
Yeah, so I love everything you just said, which is one of the reasons why I really wanted to start hanging out with you guys more. But going back to, I know you have a background in sports. You played college soccer. I played college basketball. So I always like to use sports analogies. And so one of the things I always talk about is fundamentals. And so one of the first things you said was that you sit down with someone else. And we're talking about raising money here, which is a hot topic, because a lot of the audience has this in common with you guys, and that they don't come from a lot of money and they don't have a lot of money. So then the question is, how do I get into real estate, specifically multifamily, which normally is a 7-figure game, right? So how do you do that? How do you raise money? And one of the first things you said was you ask questions. So talk a little bit more about that in terms of sales and raising money is not really about convincing someone of anything, but the fundamental skill set is really asking questions. So I'd love to hear from both of you guys. Expand on the skill set of asking questions as it relates to sales and raising money.
Yeah, would you like to take that?
Yeah, I mean, that is such a big thing, because that's something I had to learn, like when it comes to raising money, is that you're not trying to sell anything, and you're not trying to convince people of anything. Like investing in multifamily is a super, super powerful investment vehicle. Right. And like people are going to know that. And essentially what you're doing is you're showing people and saying like, this is how it can help you. And like, how can I help you? And like, what are your investment goals? Yeah. Because if you're a really rich dude and you're in your 50s and you're a doctor, this may be great for you to like sit down and, put some of your money in syndications or whatever it might be. But you also have to understand, like, if you're 18 and you're trying to get into real estate and you need to raise money and you have none, and like that, your route is going to look different. So like, I think just like being in that servant mindset of just like, how many people can you actually help? And like being interested in the person, not just so that you can obtain your means, but like, how can I actually get this person to where they're trying to go? Yeah. I think that just like has ripple effects, whether you get money from that person or whether you lead them to someone else or whether someone else helps them out. Like,
you're not selling, you're educating. I think that's something that's really important. You're definitely not selling them on because the selling, if you're focusing on selling happens when you get a sale. And so if you're selling, you're thinking about the end product, which is a sale. And if you're thinking about a sale, you're not going to get the sale.
Right.
So you're educating. You're educating them on what the vehicle is, how powerful it is, why you're excited about it. Like when you find a really good song that you like and you're trying to convince your friends to listen to it, you don't tell them why like you liked it necessarily. You're telling them why they're going to like wanting to listen to it and the things that song makes you feel. And you're trying to kind of do the same thing with multifamily. Why did you dedicate your life to it? Because we both dedicated our lives to it at this point so far, especially our working lives. So it's like, well, what made us make that decision? Why is this vehicle so important? And if you're on a live stream for Bigger Pockets right now, you've pretty much you've committed to real estate quite a bit as well. So why are you spending the time on the weekend or during the week to be on a live stream? Like, why do you like real estate that much? And you're really just telling the person that. And from there, everything kind of moves forward. And it's far less about like selling.
Yeah.
It's very well said.
Yeah, I think the punchline and what you guys are all saying is just, you got to, in order to understand someone's problems and to add value, you have to ask questions. And so you're asking qualifying questions that really expose a problem or problems or some holes in their personal lives or the financial lives or whatever it is. And then when you understand those problems, you can offer a solution, which is value. And then the outcome of that most of the time is a sale or them investing. But that's not really, that can't be the mindset. The mindset it has to be going in is, how do I add value to this person? How do I add value? And if that's the mindset, I think a lot of good things are always going to come. Some of those good things, maybe they're going to invest, but there could be other relationships or other opportunities that come from that. If the mindset is going into the meeting, every meeting, how do I add value to this person? And the only way to uncover that is by asking really good questions.
Yeah, it is such like a macro thing too. Like when you look at it in the long term, even if like a single interaction goes horribly and you get nothing from it, when you do that 1,000 times and you're like doing it for like with a servant mindset and you're like looking to actually provide value, it absolutely comes back. Yeah. So like, and I think another thing too, people kind of look at like, oh, I have a pitch deck and like, here's, depreciation and whatever, and you get these benefits and stuff. But if I'm talking to someone and they're really insecure about the fact that like they think real estate's going to crash, or like you have to really find like the value. I forget, it's like some Harvard study. It's called like value opportunity or something. So basically like, even if something's super, super true, maybe I can really talk to someone about tax benefits and how amazing it is. And they already know all of that. And I'm not going to pull them at all. I'm not going to tell them anything they don't already know, because they're really insecure about like, oh, well, Charles Schwab like keeps my money in an ETF and I like that. Like, so I think when you actually learn about someone, you can actually be like, oh, well, here's where I can provide value. Because like, you might know more than me about taxes, but I know more than you about this. And like, I can exchange that information to you. Like you can even learn something from them. And like, you can take that with you, like, as you continue talking to more people.
That's always one of my goals, is to like, when I talk to people, no matter what side of the sales I'm on, basically, is like, I always want to learn something, like one thing from that person. A lot of times not a new thing, but it's a good reminder. Like, oh yeah, I need to do this, or he said something, or she said something. That's a great reminder to do this. And I think if you always have that, kind of goes back to what you were saying, Kyle, like be interested in the person. Hey, learn about the person, peel back the onion. And like, you get to learn some really interesting facts, which is, good from a business standpoint, but it's also good from just like a personal development standpoint as well. So let's go on the second question, then we'll go on to the live YouTube comments. So Terrance, I think this came to you from LinkedIn, and I love this question. So you guys are 21 and 22. What attracted you to real estate over other opportunities for your age group? And I want to add on there like Bitcoin. But what I'm curious, like whatever,
or Dogecoin.
Real estate.
I know. I want to start with you, Van, because you said you lost money in everything.
Yeah.
I think you've had a more exciting experience than Kyle had. So I want to ask you that first.
Yeah. So I think the first time I ever bought anything with the intention of like investing or entrepreneurship, with the exception of like when I was a kid, like car washes and lemonade or whatever, lollipops, like it was, I think Bitcoin. I forget what coin it was, but this is a long time ago. And I bought it. And I bought like $50 of it. And I remember watching my fees get taken out to where it immediately was just like 45. Like I just lost $5 on fees. I didn't even care. And I watched it go from 45 to 45.01. And I just felt electric. I was like, I just made money for doing nothing.
Did you sell?
Oh, absolutely. Or I think what I did.
Profit?
Yeah, I think I let it get to 30 and then sell, So
that sounds like my trading technique.
Lock in your losses. Yeah.
Buy high, sell low. That's my philosophy. And
okay, so you tried that. Like what? But like go through the stuff you tried, because this is
Right.
so fascinating to me.
Yeah. So I think the other stuff I tried, I guess what I should say is I kind of lost that entrepreneurial drive because, like, I don't know, not to get my whole life story, but kind of like in high school, I've always sucked at school. Like, I didn't really intend on being like an academic of any sort. Never wanted to be a doctor or lawyer or anything, but I was always like good at math, and I was just like I had a lot of aptitude in like STEM, and so I ended up getting into like a really good engineering school, my dream school at UT. And I got there and I kind of just got sucked into the like, oh, I'll just be an engineer. I like cars. Like, this should be cool. And then sophomore year, I went and did an internship, and I actually got to be an engineer, make engineer money, work engineer hours. And it just blew. And I was like, this is not life. And so I remember like 2 weeks in, I called my mom half crying, and I was like, this is not it for me. Like, I'm starting a company. And then I started selling like t-shirts or something. I started like a Shopify drop shipping store. I was selling like dog toothbrushes or something, because some YouTube video told me to. I started day trading. So I was following like Ricky Gonzalez on like Thinkorswim. And then, then I was doing like options too. I was trying to like straddle. It's just, I was trying to pretend like I knew what I was talking about. And I just, I'd make like $500 one day, lose 1,000 the next, and think that I just knew what I was doing. And eventually, and I'm kind of being cynical. I mean, I was really searching for something. Like I was obsessed with Gary Vee, and it's just like the first person that I've kind of saw who was like open that door to like, oh, I can do something for myself. Like I thought life was just going to be laid out for me. And then I kind of moved into real estate, and I started watching a couple small YouTubers, and I was like, wow, like honestly, the thing to answer the question that attracted me to real estate is like, I had tried all these things. I'd been in the stock market. I had like wasted a lot of money. I had like 100 t-shirts in my room with nothing to do with them. And I was like, wait, I can like get appreciation. People will pay down my mortgage. Like, it's, a lot less volatile. There's all these things. I can control it. I can touch it. I can like, and all this stuff. And I was just like, wow, this is kind of the answer. And then I decided, okay, that's the thing. Like, I'm going to go buy a duplex as soon as I'm done with this internship and I move back. Like, I'm going to buy a duplex. I'm going to rent out the other half or whatever. And I was like literally close to doing it. I got lunch with this guy, and he had just closed on his syndication. He was like, nah. So then I changed routes, but really just like, honestly, the fundamentals and like the numbers is just what, like, the philosophy of real estate and the numbers just is what did it for me.
So there's a lot of people kind of in your situation. They're, looking for opportunities, not do the normal 9 to 5. What's one actionable item you give them to help them on their journey?
Yeah, I guess I would say, man, it sounds so weird. I feel like I sound like a guru right now, but just to like dip your feet in every bucket. Because again, like, I arrived at real estate. I think real estate is super powerful. I think everyone should be investing in it in some capacity. But there are people killing it drop shipping. There are people killing it small business. There are people killing it in the stock market. Like, I think you just find what makes sense for you. And when, I think more importantly than anything, a better way to phrase that is like, I could be killing it in the stock market right now. I could be killing it in drop shipping if I would have just stuck to something, because nothing's magic. And like, I think that when you like really dedicate yourself to something and you just decide that you're going to succeed at it no matter what, like, you will. And I think it's kind of as simple as that. Like,
yeah, that's well said. What do you think?
What about you?
Yeah, I mean, I have a more boring story than that. I think, I've always like, as far as like trying other opportunities and things like that, I've always kind of stuck to one thing. I mean, I grew up in a football-centric town in Central Texas and played soccer. I mean, I've always just done one thing that was kind of off the ordinary. Yeah, and in a weird sense, and I don't know that it's on purpose, but the same thing happened with real estate. As soon as soccer stopped being a thing for me, I went right into real estate, and I didn't really deviate from it. And I think Van's final point there is so correct. There is no magic formula to anything. I mean, real estate can work or it cannot work. I mean, a lot of people can lose money in real estate. It's not bulletproof. It's definitely a great investment vehicle, but you can mess it up if you don't commit yourself to it. And really what happens is you just have to commit yourself to it. I'm sure there's a lot of options traders that make tons of money, as Van was saying. It just comes down to focus and commitment. And there's an interview with Bill Gates and Warren Buffett, and they get asked, what's the most important thing to your success so far? And at the same exact time, they say focus, like in unison, they say focus, like both of them. At the same exact time, those are two very successful guys. And what they're really saying is, whether it's investing or tech or stocks, whatever it is, if you can focus on something long enough to get through that latent potential curve, like, you will see success, you will see results. Doesn't matter who you are, where you come from, how much money you have, who you know, etc. It's just about being willing to ride through that dip in that plateau and then find your way several years later in a good location.
Yeah.
Yeah, for everyone out there with ADD, they need to rewind that and listen to the focus part. That was well said. So Van was talking about he went to lunch with you. He was about to buy a duplex. You told him to not do it. You had just closed. So walk us through that story and what happened there.
Yeah, so we went to Mad Green's because it fit our macros.
In Austin?
Yeah, in Austin. And
Mad Green's in Austin. So you guys are eating healthy.
Mm-hmm.
All right. Van's about to buy a duplex. Now
I basically just told him, like, in order to get the cash flow that you're looking for, you're going to have to close 15 duplexes, which is 15 transactions, 15 negotiations, 15 sellers, 15 properties, 15 lots, 15 inspections,
Tenants.
15 tenants, 15,
Right.
like 15, just multiply all your risk and exposure by 15. And then you have the cash flow that you could have from one multifamily deal. So I was basically just telling him, like, you can go through those 15 transactions. That can take you 4 or 5 years. And you'll actually probably have to get a job in that meantime. So it'll probably take you more than that. If you dedicated fully to that, it'd probably take you 4
And how did you arrive at that? Because that's really astute for someone that's 21, 22 years old to be able to come to that conclusion. So how did you get there?
I think it's just simple, like scale, just simple understanding of, like, for example, if you're trying to lease 2 tenants, it's going to take you X amount of capital, even just to get your stuff on apartments.com and all of the places you get your accounts. Probably take you, I don't know, $5,000 a year just to even break even and put it out there for people to lease with you. And if you don't have the scale to at least afford that per unit cost, then you're going to just be wasting money. You're going to be spending your tires and you're going to be spending more money than your property can support per door. And so when you have more doors, you're just able to spend more on marketing and less per door, even though you're spending more on marketing. And it just starts to make sense. Your payroll is better. You can hire more qualified people. All your expense lines make sense. And you don't have to, and just even basic occupancy. Like if you have 10 units, you lose 1, you're already at 90% occupancy. If you have 100 units, you lose 1, you're at 99% occupancy. So like one person's life can change in an instant. I mean, COVID's a great example. One guy moves out of your apartment, that's not that inconceivable, right? But if you have 10 units, you're already at 90%. Then you're at 80% if you lose another guy. If you lose 2 people on a 100-unit property, you're at 98% occupancy still. So, I mean, you can kind of have those life situations happen in your community, and you're not completely dead to right.
Yeah, I love it.
I have an interesting question for Kyle. Kind of like my first book that I read was Millionaire Real Estate Investor, I think, by Gary Keller. And he's just like, it's a super like hype.
Founder of Keller Williams.
Exactly. Yeah. And he's just like super hype inducing book. It just tells you like, you know, all these people who've created wealth in real estate and stuff. And really he just very like surface level kind of breaks down like why it's cool to own real estate. And that's like what sent me on my journey, like to bigger pockets and stuff. Was Rich Dad Poor Dad what kind of showed? Because I know Robert Kiyosaki talks about like buying apartments. And like, that's not even something I ever thought of, like humans owning. I just figured some big ambiguous corporations. Like, so like, where did that light come from? Because I didn't even think of like, who owns this thing? A human? Like,
did you read that or did someone tell you that?
I feel like I definitely heard that from a podcast, and I think I want to give credit to Jake and Gino for that. Honestly, I think that's probably where I heard that from first. Was just seeing those guys talk about scale and understanding that you're not necessarily doing more work, you're just doing more efficient work. And I've found that in life that tends to be trying to do the things that are going to get you more bang for your buck is usually a good way to go. And so that just seemed to be one. And there's definitely a huge like mental block of even people saying, oh, I want to buy a 40 unit, not a 100 unit, because I think I can acquire that. But it's the same problem. You're just kind of dipping your toe in there, and you might as well just dive all the way in the pool. You want to be trying to do large as possible, in my opinion, just because it makes scale so much easier. And the acquisition phase is definitely harder than a duplex, for example. But the ownership period, and hopefully you have that thing for 5-10 years. That 5 to 10 years is going to be so much easier on you if you own a 100 unit than if you own a 1 unit, even though the acquisition phase is going to be easier on the 1 unit. So you're going to pay up front in a lot of pain, but typically when you're trading and negotiating, you know, for present pain and future reward, that's typically a good trade. And if you're trading for present reward and future pain, that's typically a bad trade.
You said so many great things there, and we have a ton of questions, but I really want to drill down. Okay, so one of my so if I was listening to what you just said, and I'm in San Francisco, and I'm like, okay, to buy 100 units that trade at $500,000, that's $50 million transaction to buy 100 units. Like, it's inconceivable amount of money. I'm 22, 23 years old. I have so much debt from college, and I don't even want to do what I just studied. I want to go buy apartments, and I agree with your thesis that 100 units is better than 10. So what is the first couple steps that I need to take if I agree with 100 units is the right play, but I don't know how to raise $10-20 million and I don't have it, and I haven't proven myself. So how do you live that out? Because I agree with you. I felt the same way. Like in Denver, I want to go buy 200 units. That's a $40-50 million purchase. I like how is someone supposed to do that?
Yeah, so I love that you asked me this question because it's actually exactly what happened to me. I was in the Bay Area, and it was 22, and I was in college, and I did buy 100 units. So it is definitely interesting. But I went to Louisville. I found a partner in a more affordable market. To your point, right? So Louisville, typically, I think we bought that deal $42K per door. So it ended up being a $5.5 million transaction. So it's 107 units for $5.5 million, which is a little bit more doable, right? Then you're only raising $1 to $2 million. It's slightly more manageable. So don't feel like completely shackled to your market, and you can buy real estate outside of your location if you find the right partners and you're able to raise capital where you're at. Especially in that scenario, San Francisco, I was at UC Davis in the Bay Area, so I was raising money from one of the wealthier zip codes in the country in the Bay Area, and I was bringing that to a more affordable market across the country. So then you even have more leverage because $100,000 investment to a Californian in the Bay is a much different proposition than $100,000 investment from someone who lives in Louisville, Kentucky,
or Des Moines, Iowa.
Yeah, or Des Moines, Iowa. So
exactly.
So there's always like these like upfront seeming like there's these huge barriers, but you can actually most barriers tend to be like the biggest advantage for you. Like our age, for example, tends to be a barrier, but as soon as we break through it, people love our story, and we get opportunities like this to come on podcasts that we're honestly not qualified for just because we have a cool story, and our age ends up giving us some more benefit, even though it seems like a barrier. Yeah. Same thing with San Francisco location. Seems like a huge barrier. You're actually rubbing shoulders with super wealthy people who are just regular individuals.
Who just created an app and overnight they're worth that.
Exactly.
Right.
So then you're like,
100,000 is like $100.
Exactly.
So yeah, it's incredible stuff. Tons of value in what you just said. And I think the punchline is when you find yourself in a market or a situation that seems insurmountable, that may be the biggest obstacle, may be the solution. And so the fact that San Francisco was so overpriced, you were able to flip that around and say, okay, it's overpriced, but there's a lot of people with a lot of liquidity here. And let me take that liquidity and go to a market that's maybe underpriced, and they can get a return they couldn't get in San Francisco.
Exactly.
That's
incredible stuff.
I think when I was first getting into like rental property, I remember maybe it was Brandon Turner or me, Kevin or something. They were talking about how like no matter what you think in your market, like, oh, stuff's too expensive, no one wants to live here or whatever. Like there are people flipping houses in your market, and there are people making money with real estate in your market. And essentially like another theme like in business that we've been talking about for like the past couple of weeks is like when you're owning stuff, when you're being a business owner, like you're being an entrepreneur, and you have to create value. Like there's no playbook. You're not going to be able to do X, Y, Z and then get your ABC result. Like you have to get creative. And like if you're in an expensive market, there's pros and cons. If you're in a cheap market, there's pros and cons. And like you just have to know like where your strengths are.
Right.
Like if your strengths are raising money, then it doesn't matter if you live in Louisville, Kentucky or whatever, because you're maybe not going to have as wide of a network, even though you have a lot of great stuff. You could debate whether or not Louisville's a good market, but like I guess it's kind of hard to say like no one's bad at raising capital. I guess maybe you're really, really shy, but you're like very good at acquisitions. I don't know. And you play to that strength. So then maybe San Francisco is not your market. So
yeah. Shout out to Louisville, Kentucky. It's
a great market.
Bought and sold multiple properties there. I love Louisville. I wish I knew more people there because I really wanted to buy a multifamily. There's a 139 unit like a mile away from campus, which was not a student housing deal. But I just didn't have the right relationships there. But to your point, it was like $35,000 a door. Yeah. It was 2017. Yeah. And it was like, it's got really low occupancy, great job. I mean, it's a phenomenal market.
Yeah.
Yeah.
So I love that you found that market and executed something there because I think there's a lot of upside there. All right. We got a ton of questions.
All right,
Chris,
we'll get to some of these.
Yeah, let's get to them.
Let's see. I want to pick some ones that are raising capital. All right. Since we're talking different markets here, Salvo, I can't even say that. Mr. S said, how to find multifamily in hot markets. Every property that seems to go on sale after one day is already pending. Any strategy to find off market or compete with multiple buyers? So a couple of questions in there. So to kind of tailor this more towards multifamily, since that works very differently.
Salva Torelli, Chris. Salva Torelli.
Thank you. Mr. S. Mr. S.
All right. Salvatorelli.
That's why I put the Mr. in front of there.
Mr. Salvatorelli.
You're better at that than I am. So, and so talking about multifamily, because multifamily is very different from, residential. So multifamily trades very differently. So when it kind of comes down to finding multifamily deals, the 5+ bigger properties, what advice do you guys have for networking that space? Because networking is so much more important in multifamily than single family.
Mm-hmm. Yeah, I kind of want to tell the story about a little bit of a story, the Berkeley unit that we're working on in Austin right now. For example, like sometimes you will have to lose a property in order to build that relationship. And I know that kind of sounds annoying, but if you can go and offer on that property that you know is going to be pending tomorrow and that you know you're going to lose, but you can conduct yourself in a really respectable way and do business the right way, that's an amazing way to build a relationship with a broker and to show them that you are legit and you can close and you're already in the arena, right? So we just went on a 72 unit in Austin. We lost to a huge firm that put $100K non-refundable day one, 0 due diligence period. So they're just buying it sight unseen, basically. So obviously we can't compete with that, but we still went to the table. We said we would give them listing on the back end. We handled the operations. We handled the acquisition just really well, honestly. And we built a relationship with that guy who's now going to be sending us off-market deals. Even though we knew we were going to lose that deal in a sense, it's worth going in and losing it and making a good impression while losing. If you can lose gracefully, I promise you will build a great relationship. Or you can go to 55 coffee meetings over the course of 2 years, whatever you want to do. But I would say that losing the deal is definitely a good way to expedite the process.
I like losing gracefully. That's very well said.
Yeah, that's something that I know you kind of like touched on recently is like when it comes to brokers, and like we can debate too, like direct mail versus hitting up sellers and stuff. I think in multifamily, there's a reason that you see people talk to brokers, especially like when you with empathy, like thinking if you're a broker and like I have some deals that I need to get rid of, and this is a hot market, so stuff's trading like crazy. I'm making a ton of money. Like I can't have someone like mess up my closing. Like if I'm gonna have someone come to me, we need to close. And you think about that, like it's more important to have like a relationship with these brokers, because as much as it's cool to be like, hey, I'm new to the industry, I'm really like excited about this stuff, I'm working really hard, like please send me deals. I may really like you, but like I just can't let that interfere with my business. So I think like actually being able to close on stuff is the most important thing. And I think, like you said, with the Berkeley deal, like we were going to crush it, no doubt. Like we were going to destroy that deal, but also like it was a lofty goal. Like we were going to have to pull a lot of strings to make that deal work. And, I guess to like get the deal to close. And the broker doesn't really see that, like all the broker sees is that these two dudes are really young. I know he has experience working with young guys. Like there were some young 20-year-olds or whatever who,
a decade ago.
A decade ago. And now they're killing it. Now they got, how many under management, and like, so they're excited about, like, they're bought into like the young guy train. Right. And essentially now his perception of us is two dudes who like, he was really rooting for us. He really wanted us to win. And now he's really excited to send us more deals because he knows that we're going to close on stuff, which is even better because now we have extra time to like prepare and just become a closer. Like that's just
putting yourself out there and not using the excuse of like, oh, I know it's going to be bought tomorrow. Yeah, it very well may get bought tomorrow, but still throw your hat in the ring and see what happens, because you will build a relationship that way, I promise.
Yeah, and it has to be a relationship too. It like no one cares if I mean, I guess there's some benefit to knowing a lot of brokers and being in conversations, but like you got to know someone. Like people are going to give deals to their friends. So yeah, I think that's important.
You got to have a long-term perspective if you're going to be in real estate, especially multifamily. You got to have a 5, 10, 15-year horizon, and with the relationships, with the property, with the construction, with everything. And so if you're going into it thinking, oh man, I'm going to close this really quick deal, get an acquisition fee, it's got to be, hey, it may take me a year or two. I remember when I was making the transition from single family to multifamily, it probably took me 12, 16 months to really build strong enough relationships where they had enough confidence to call me when they had an off-market deal and had one shot to get it closed. Because a lot of these sellers are very sensitive, peculiar individuals that have a lot of money, have had a lot of success in other ventures, and they're not looking to waste their time. So they'll give a broker one shot. Hey, here's my number, bring me an offer. If you can close it, great. You'll get paid. If not, I'm going to move on to the other brokers that have been calling me. So, it takes time to build those relationships and that trust. So to what, just to emphasize what you guys are saying is you got to have a long-term perspective, and the way that you conduct yourself will go a long way. That's been my experience. So I completely agree and echo what you guys are saying.
So we got time for one more question.
Wow. That went fast.
Well, we get chit-chatting about real estate. Before I forget to mention that, I forgot to mention at the beginning, Terrance, that so after we're done with this live, we're taking a quick break, and then we're sitting down with Kyle and Van to record a in-depth video podcast on how these guys got started in real estate, how they got started at such a young age, what mistakes they've made, the wins they've had, and they'll be part of a brand new YouTube talk show. It comes out in a couple months on a new Bigger Pockets YouTube channel.
What's the show called?
Ooh, what is it called, Terrance?
The Multifamily Tribe of Mentors. And we're super excited. It's going to be focused on multifamily. We're going to talk about how to operate properties, how to do construction, finance deals, how to find deals, how to structure deals creatively. So it's going to be a all things multifamily show. We're going to try and do one a week, which is pretty lofty, but there's a ton of great relationships we've built around the country. And we think we're going to have some really interesting guests on. They're going to talk about some things that are going to really just drive value to the audience.
Yep.
So we're super pumped about it.
So
and these are the first guests that
Yeah.
I think are going to be excellent to kick off the show.
So question here from James. This is very a great question for I think it's you, Kyle, talking about Louisville. How do you find the complex in Louisville? I live in Kentucky and struggle to find commercial multifamily deals.
Fantastic. Yeah, I'll even give you a specific broker website because I think that'll be super helpful.
Wow.
If you go to the Kirkland Company in Louisville and you go to their website, they have at least like 5 or 6 listings that you can look at right now. Even if they're not available or they're pending, you can look at the OMs and the profit and loss and get an understanding as to how to underwrite like a deal if that's something that you're looking for. And also just going to broker websites, because if you go to loopnet.com, you're probably not going to find anything. That is technically, like most people call it, the graveyard of deals in real estate. So LoopNet's not necessarily the best place to go. But if you can find the top 5 or 3 brokers in a market and go to their personal websites and sign in to their portal, they'll have at least 1 or 2 deals on there that are multifamily to where they may not be offerable. But if you can actually underwrite them and send that underwriting to the broker themselves via email, that is such a better introduction than, hey, I'm looking for multifamily, me and everybody else in the whole entire country. You know what I mean? If you can send them your analysis of a deal they have listed and show that you're interested and you took the time to underwrite their deal, and then send them an email, hey, this is how I got to my NOI, this is how I got to my numbers, I understand what I'm doing, I am actually someone who can buy a deal with you. That is such a better intro email, and I think that's probably a much better way to start trying to find a complex in Louisville would be, and I would say start with the Kirkland Company. That's where we got our deal from, and they're definitely probably, I'd say top 1 or 2 brokerages in Louisville.
It's great too.
Tons of value right there.
All right, guys. Well, everyone on YouTube, thank you for joining us. So we're going to start doing these YouTube lives with more frequency here coming out in next couple of weeks. And then right around April, you should see this new show coming out that Terrance mentioned, the Multifamily Tribe of Mentors. I said that backwards.
It's all good.
The Tribe
They
of
get it.
Multifamily
Yeah, they get
Mentors,
it.
right?
They understand.
All right, guys. Well, thanks so much. Be on the lookout for this show dropping in a few months.